Welcome back to the morning show here on Arise News. In furtherance of its quest to make financial services more accessible and affordable to various stakeholders in the economy, the Central Bank of Nigeria recently reviewed downward-most charges and fees for banking services. The Central Bank of Nigeria reduced the withdrawal fee charged for the use of other banks' automated teller machines from 65 naira to 35 naira. The fee, according to the CBN, should be imposed on customers after the third withdrawal within 1 month. Now, the CBN also removed card maintenance fees on all cards linked to current accounts.
And just yesterday, the Central Bank of Nigeria urged customers not to pay 50 naira charge to businesses for using point-of-sale, that's POS machines. Well, Musa Jimo, a director in CBN's Payment System Management Department, explained the Apex Bank's Merchant Charge Directive on Monday, noting that the stamp duty is a fee regulated by an act and has been misinterpreted. He further noted that what the directive says is that all merchants should pay all necessary charges as regulated by the government agency, including stamp duty. Well, joining us now to discuss Nigeria's economic prospects in 2020 and the readiness or capacity of the administration to drive growth in the new year is renowned economist Tilewa Adebajo. Welcome to the morning show.
Good morning.
Good morning.
Thank you for having me.
Tile, good morning.
Absolutely.
Good to have you. But before we begin to talk about economic outlook for 2020, we would like you to help us review some of the measures adopted, particularly on the monetary side and the fiscal policy side, in the course of 2019. Growth, we're told, there's been GDP growth third quarter, and that we'll see growth again in fourth quarter, and that we're likely to carry that into 2020. Some of these measures, including some of these monetary policy measures by the CBN, do you think that they are sustainable? Do you think that the growth that we have witnessed towards the end of the year is sustainable?
Well, thank you very much for that, Ruben. It has been, in fact, a very challenging year. And I think one of the most unfortunate things as we go into the new year is the fact that all the key credit agencies have downgraded Nigeria's outlook from stable to they've really downgraded us. So instead of looking at us now as a stable economy, that outlook has changed, which is rather unfortunate. And why has this happened? 2019 has been a particularly challenging year for Nigeria. One of the key problems we've had with the economy is the fact that the monetary side of the economy has been the only focus of the economy. But unfortunately, we've had challenges on the fiscal side in terms of government being able to mobilize its revenue and to be able to get its fiscal restructuring in order. Because over the last 4 or 5 years of this government, they have been financing their budgets with deficits, which has accumulated in a massive debt profile. The debt profile for Nigeria has gone from about $40 billion, now currently $80 billion. And we're using about close to
Within a scope of how long? A year?
No, within the last 4 years.
4 years.
So we're now using close to about 55 to 60% of our revenues to service debt. So on the fiscal side, there's a lot of challenges there. So what monetary policy has done is just to be able to stabilize or try to stabilize the rates. But unfortunately, one of the key economic indicators, which is inflation, is something that is now getting out of control of the central bank, which was as high as 19%. They were able to bring it down to 11%, and now it's on the rise again. You talked about growth. But unfortunately, the growth numbers are not very, very positive in the sense that our growth has only been 2.5%. Now, if you're growing at 2.5% and you have a population of 180 million people that is growing at 3% a year, then the growth cannot impact that population. So basically, with the growth of 2.5%, we're not even near our population growth of 3%. So at minimum, the Nigerian economy must be growing at 5% a year, and we haven't reached that target.
But when you say, 2019 has been a difficult year, on both sides, monetary and fiscal, could that be because this was election year, and that, of course, had a corresponding effect on uncertainty, the deepening of uncertainty within the economy? And when you talk about, policy measures, will you say that we should blame the closure of the border for, the headwind inflation that we have seen? because you refer to inflation, going out of hand.
Yeah, one of the problems we've always had in Nigeria is that we think because of elections, it affects the economy. What tends to affect the economy during elections is more the foreign direct investments in terms of the FDI on the portfolio management side. The portfolio investors fearing the outcome of elections might have priced their risk into that. And we saw that a lot of all these issues are affecting the Nigerian economy in terms of confidence. The problem of the overall economy really has been confidence. If you recall, this government came up with an economic recovery growth plan, and they had projected that the economy was going to grow 5% this year and 7% next year. And clearly that is not happening. So it's important that they need to go back to the drawing board with this new economic management team they've put together. They need to set a new policy direction. It is that lack of policy direction of this government in terms of how they want to manage the economy going forward that is creating a lot of the uncertainty. And basically, we don't have the stimulus that will grow the economy. And as you know, if our economy is not growing at more than 5%, with 3% economic growth, your economy is growing at a lower rate than your population growth. That accounts for more than the 100 million Nigerians have in poverty, and we are now labeled the poverty capital of the world. So the key really is that we need to grow this economy at 5% a year at the minimum, 6% at the optimal. If we're not doing that, we'll continue to have 100 million Nigerians in poverty. And what this government needs to do is to create that stimulus to be able to balance not only monetary policy on one end, but you need to also balance fiscal policy, investment policy, and trade policy. It is the synchronization of those four policies that will eventually drive economic growth. And we need to see a clear policy direction from this government for the next 3 years.
Well, it's interesting that you talk about this government because President Buhari spent, I believe it was 650 billion, which is more that on subsidizing petrol, which is more than the education and health spend put together. But I want to talk about the oil GDP growth because we were speaking with the Honourable Minister of Steel and Mining, and we know that Nigeria does need to diversify its assets in order to gain momentum within the GDP. And the VAT rate has increased by 50%. What can we do to alleviate this in order to have a better 2020?
Well, we need to be very careful because, you see, if you begin to, VAT is a consumption tax. And if there's no stimulus already and there's no disposable income, and you have unemployment at about 35%, so where is the productive capacity in the economy to spend to be able to create that stimulus? So if you continue to tax, at a very high rate, then you're going to decrease consumption. Exactly. And the spending, you will not be able to get that spending from the that stimulus from the spending to create growth. And so these are challenges that you really need to balance and to be very careful about. As you've said, quite rightly, we need to diversify this economy because we're very dependent on oil. It is something that we've talked about a great deal, but it is something that we are not doing much about. And what is important, that what people want to see, or investors, both local investors and foreign investors, especially companies here who should be able to expand their factories, is they want to see a clear direction. Once you have that clear direction and you have business confidence, then local investors will go out, they'll spend, they'll build more factories, they'll build more properties, they will invest in more business, expand their businesses, and the foreign direct investors will also come in. But if we do not have the right structural approach to our economy, then that becomes very difficult, and we're going to have stagnant growth for the foreseeable future.
Would you say that it's a factor of insecurity?
Yes, I mean, security is also very critical. I mean, we've been able to deal with our security issues, and I think that security is not something that is on the front burner as we speak. We believe that has been managed and it's under control. And it's important to be able to project that positivity and to be able to deal with that situation once and for all and manage those perceptions, because it is all these issues that affects investments. Because if you're not investing, you cannot grow the economy. If the right policies and incentives are not there for investment, it becomes very difficult. And if you have a situation whereby 100 million people are in poverty already, if you're increasing VAT and all the consumption taxes, you're going to impact them negatively. So these are the sort of things that we need to be very careful to be able to provide the stimulus. Now we're going out to borrow $30 billion.
Yes.
And you're going to take the debt profile from 80 billion to over 110 billion. So now if you take a debt profile from 50 billion to 110 billion in 4 or 5 years, and you don't have much to show for it in terms of economic numbers, in terms of the GDP growth, then we're going to be in trouble. And another problem I have, which nobody's talking about right now, is that there's something called the Fiscal Responsibility Act. Clearly, with this borrowing, the government is in violation of the Fiscal Responsibility Act. And I think that that is a debate that I would like to have in the House of Assembly, in the Senate, to talk about the Fiscal Responsibility Act and how the violation of this act with the borrowing and how they're going to readjust the limits. Because clearly, the limits, the borrowing limits have to be reset. And we have to relook at this borrowing because the impact on this economy of this borrowing, I think is going to be negative if we're not very careful.
Okay, now with all this in view, looking at 2020, what prospects are we looking at in terms of price, in terms of foreign exchange? Like you said, inflation has risen. So with all this in view, are we looking at 2020 as just another 2019, but with a 2-0 at the end?
Definitely. I mean, for all foreseeable future, because what the central bank has done is that the central bank has held rates, the MPR, very steady for a very long time, probably for about a year or two. And what they're doing is that they're using the open market operations within the banks and the deposit ratios to be able to try to create some sort of stimulus for lending. If the banks are not lending, then it's difficult to stimulate the economy. And they're now trying to adjust the loan deposit ratios to push the banks to lend. But if your economy is only growing at 2% per annum and you have 100 million people in poverty, who are the banks going to lend to? So the banks are also going to be very careful because they don't want to create bad loans. So the economic environment also has to be right for us to be able to get things going. In terms of foreign exchange is also something that I think, as my own personal opinion, is the fact that the Naira is overvalued. I believe the Naira should be trading at close to 210, 215, because even probably close to 200, because we have multiple exchange rate windows. The diaspora in Nigeria for abroad today bring in $30 billion every year. But unfortunately, most of this money is not going through the banking system. We need to be able to create that confidence back into our domiciliary accounts and let this money flow through the banking system. If this money comes through the normal banking challenge, I'm sure that we'll have a lower exchange rate. And
the banks are trying their hardest to enable that happen. They've stopped peer-to-peer FX transactions. You've got to register all dollars that come into and out of your account. I know this firsthand because I had to go through the process.
Yes.
But things outside factors are also affecting Nigeria, from Brexit, voting to leave the EU, being that we represent 2% of that trade, to US-China relations. So what is it that we can do as a country in order to, as Kechi has said, have a better 2020 than we have had in 2019?
Look, after all is said and done, Nigeria is still the largest economy in Africa. Lagos is still the 5th largest economy in Africa. So the potential of this economy, Nigeria is a G20 economy globally. So the potential of this economy is there. So it's now a question of the leadership to be able to create the right policies to be able to grow this economy and deliver value to its citizens. We live in a global economy. We sell our oil abroad, and oil prices definitely will affect us invariably. Yeah. But we have a low interest rate regime globally right now, maybe close to 1%, 2% abroad. So how are we taking advantage of those rates? So I think it's important to understand that, yes, this is a very powerful economy in Nigeria. And it's a question of how the leadership of this economy is managing this economy to deliver value for its people.
Well, let me take you back to something before we forget, to the point you raised about the borrowing plan, which in any case the federal government has made clear will be for infrastructure projects. It won't be for consumption. And to ensure proper funding of Budget 2020, the Senate President was drawing attention to the production sharing contracts Amendment Act, and also to the Finance Bill, which has also been passed by the Senate. And that, all of this will bring, substantial revenue stream to put the government on a good footing to be able to fund the budget in 2020. And above all of that, the Minister of Finance insists, and I know opinion is divided among economists over this, that the debt to GDP ratio is still very low, and that we need not, express anxiety about Nigeria borrowing more. But you refer to the Fiscal Responsibility Act. Yeah, what are the limits defined in that law that you say we've not been talking about?
Okay, I think first of all, let's appreciate the fact that, yes, these are all laudable projects that the Senate are trying to push through, and these acts and trying to get a balanced budget. I think we're fine with that. But the reality on ground is the fact that everybody keeps talking about the debt to GDP ratio, that it's fine. But even in personal financial management, if you're using 60% of your income to service debt that is not generating income, then you're in trouble. Take a look at the Abuja to Kaduna railway line that was financed by the Chinese. We're not making any revenue from that project. It's a project that is not generating revenue to be able to at least pay back some of the loans that we took from that. So the burden normally ends up with government. So what we're trying to see is the transparency and let the Senate and the House debate the Fiscal Responsibility Act to see the fact that they have exceeded the existing limits and what laws have they done to pass to be able to adjust for those limits. That they have not done. Because clearly what they're doing, yes, you want to put this money, you want to put it into infrastructure, you want to put it, it's all laudable. But the fact is that the reality is that as we continue to spend 60% of our revenue to service existing debt, and we want to pile up that debt from 80 billion to 110 billion, the fact is that if we're not very careful, we're going to end up into a liquidity crisis. And I think that this is where the anxiety is. So we mustn't look at debt to GDP ratio. We take a look at the revenues we have, how much of that revenue we're using to service debt. So government has only 40% of its revenues to be able to fund its recurrent expenditure and also capital budget. So we're in deficit financing for the next 5 years, the way I see it.
Are we predicting another recession?
Recession is too early to say because the economy is growing comfortably at 2.5%.
You have to have negative growth for 2 quarters.
So it's just that the problem...
But at the point, at the rate that we are going, borrowing an extra 30 billion, making it 110 billion from what you're saying, if we continue like this for the next 4 years, are we predicting another 2017 recession?
Not a recession. What you have is a liquidity crisis within government. So let's make a big difference between that because the economy is growing comfortably at 2.5%. But that growth is not enough for our population at 3%.
Exactly.
But it is growing.
Okay.
So the trajectory of growth is on the upwards, but not enough. So what we're saying is that what policies are you going to put in place to create the stimulus to be able to get growth to 5%? If you get growth to 5%, you've solved a significant problem. Then you're taking 100 million people out of poverty.
Let's look at the CBN governor. This year, all through this year, the Monetary Policy Committee has refused to vary any of the, benchmarks, either monetary policy or liquidity ratio or cash reserve ratio. And he has given the indication that in the coming year, that's likely to remain consistent, even if in the short term. And that even next year, for purposes of financial intermediation, where there has been a lot of activity, that in fact the loan deposit ratio may even go up to 70%. Do you think that all of this will help to address some of the major challenges we face even now? High unemployment, for example, productivity within the economy, growth of the SMEs and all of that.
The central bank, as you said, is not really focusing on growth and unemployment. Their focus is to maintain financial stability. And I think he's defined that very clearly because you have major the challenge in Nigeria is fiscal restructuring. We have major fiscal issues within the federal government of Nigeria, and that needs to be addressed. So if you have those fiscal issues, the only thing the central bank must do or does is to be able to maintain financial stability while the government tries to sort itself out. He needs to get inflation under control. He needs to get the foreign exchange under control. because there are major challenges within the government. So what we're looking at now is that the government needs to go through significant fiscal restructuring. There needs to be a structural adjustment on the fiscal side of government if anything is going to move in this economy. And two other factors we don't talk about much is the trade policy and the investment policy. So the trade policy is what you are seeing now with the border closure.
Yep.
Okay, so the whole issue of how do we address our trade policies in terms of, so now government is beginning to take a look at that. And they said, okay, we're going to focus on our trade policies now. There are all kinds of issues with balance of trade, illegal movement of goods into our borders. So they're now focusing on that. Now they've shut the borders. We're beginning to see certain adjustments, and they're beginning to insist on certain things. And I think it's a positive move because a lot of things that we've taken for granted before, enforcement becomes a key. And
do you think that the border shut, that it is positive? Because it's making land trade more cumbersome, and now SMEs are becoming non-competitive.
On the short run, and I think that we should take a look at the reason why it's being done. Because if you have a trade policy, and your trade policy is focused in a particular way, and some people try to, even mostly they're Nigerians or people that live here, they'll now import things into a third country and then bring it across the border. And that is definitely illegal. It undermines our market. It becomes a dumping issue. And I think that it's important that the customs enforce this, not only with the enforcement, they need to work with the governments of ECOWAS and to be able to ensure that that trade agreement we have within ECOWAS is functioning effectively. Because it's not only Nigeria that is being affected, they're also being affected on the other side.
Well.
So you said in the short term it's good, but what happens in the long term?
On the short term, it's good, but on the long term, we need to address these issues so that the right things can move through the border.
Yeah.
It's not that we're not saying things should not go through the border, but we don't want the wrong things going through the border.
The wrong things to come in. That's going to be a problem. Now, let's talk about the, Stamp Duty Act. It's been a, conversation that's been had. And, the fact that individuals, that is the consumers, are now being excluded, like, oh, you don't have to pay directly. It's the merchants that need to pay this stamp duty. Does that completely exclude the consumers from paying anything at all?
Well, you see, for me, I'm not a fan of these sort of taxes because invariably it's the consumers that will pay.
Exactly.
The merchants are not going to pay. They're just going to add it to the cost of production.
You.
So whichever way it is, you will pay this tax. It's going back to the consumers. Now, for me, when you have one of the things that we've done successfully, I think Tunde Lemo, who was then the deputy governor of the central bank, spearheaded electronic payment systems. He spent a lot of time, and this was something that was at ground zero. We didn't have ATM machines. We didn't have, we couldn't use our telephones then to send money. But all of a sudden, within the last 6 years in this country, we have created one of the most sophisticated electronic payment systems in the world. And all of a sudden, transactions are moving in that direction. Now you have a successful channel to be able to reduce your cost of banking. Then what do? You start to tax it. So for me, it doesn't send the right signal because this whole platform hasn't yet reached the level of maturity. And there are many ways to be able to tax this, to be able to get the consumers out of it. So for me, I think you need to review that because you see, again, you are in a situation whereby 100 million people are in poverty. You don't have that core group of if you had a solid middle class of about 50 million people that were earning properly and were fully employed and had disposable income, then there's no problem there. They can afford that. But the economy is still very fragile. So you need everything to be able to create the stimulus.
Well, you gave the impression that the economic outlook for 2020 is one of fragility.
Yes.
Now, how serious is that fragility? And what are the specific things that government needs to focus on? You've talked about policy, but there are, specific low-hanging fruits, easily identifiable challenges that we need to address. Is it power? Is it infrastructure? Is it employment? Is it what in specific terms? And what should be our expectations? The people will be affected. The
most significant challenge to Nigeria today is the government's debt profile. And at $80 billion, it's not sustainable. And now we're planning to take that debt to close to $100 billion, $110 billion within a space of 5 years. For me, that is the biggest threat to our economy today, even next year, because what will happen is that if government begins to spend close to 70% of its revenue to service debt, then there's no stimulus in terms of what it's going to do. Infrastructure deficit is something that has been with us for a long time. The power sector has been something that has been with us a long time. What are we doing to resolve these issues to be able to create viability? It's about regulation and creating markets. The telecom sector is very successful. Why isn't the power sector successful? Because you have not created a market-driven model. You have to create a market model to be able to drive investments into these sectors. But if you have restrictive policies, the coordination between the DISCOs, the GENCOs, and of course the transmission network is very important.
There is problem with market-driven models.
Exactly.
Ideological issues.
No, you see, ideology, you cannot, if you're not writing a socialist model, that's not what we're doing. And you've also mentioned something apart from the debt we've talked about. You mentioned the subsidies.
Yes.
The petroleum subsidies are something.
650 billion.
This petroleum subsidies are also something that is going to affect us in this economy. We need to address these issues.
Particularly now that the US has overtaken Nigeria in terms of oil production, and they're making these bilateral trade agreements with places like India. So how is that going to affect us in the long run, being that we have not yet diversified away from oil and gas?
Well, that diversification is coming through. We have an LNG Train 7 coming through. It's a $10 billion investment. But again, we're struggling to reach that final investment decision. But all these sort of projects need to get going. The LNG Train 7, various gas projects that we need to do to be able to sustain our economy. The Dangote refinery is also coming through, which is private sector driven. And I think that will address a lot of challenges going forward in terms of diversifying in the oil and gas. And it's actually interesting because it's not actually starting with the refinery, but actually starting with a urea plant, which is coming online. So there are many things that we can do, and like I've said, the fundamentals of the Nigerian economy are still very sound. We're still the largest economy in Africa. Lagos is still the 5th largest economy in Africa. What this economy requires now is the leadership and the policies that will drive growth to the benefits of Nigerians.
An amazing place to end.
Exactly.
Thank you very much, Tilewa Adebajo.
Thank you.
Always a delight to have you here.